Hey, how's it going, everybody? Anmol here. Welcome to another edition of the Swing Trading Newsletter. June 7th. How's everybody doing? Right? 2020, man. How fast is this going by, right? I mean, it feels like 2020 just started. I was just about to get started on my New Year's resolution, and, we're halfway through the year already, which is crazy, right? Crazy, crazy, crazy. Halfway through the year already. But, it is what it is. So, let's get started. Craziness keeps getting crazy in the market. First we had obviously the coronavirus thing, which still is going on. It hasn't gone away. But the attention of people is now diverted towards the riots and all that things that going on. So that's the new thing now. But hey, market is like, I don't care what people are doing or thinking. We're going back to all-time highs. So what a recovery. I mean, just think about it. What a recovery. Like, if you've been in the newsletter for a while, we got this decline and looked like we're going to get a large pullback. But man, market bounced right off these zones. You can see here the support and resistance zones that we drew back in the newsletter. And I said, hey, these are the zones where potentially we start bouncing. And look at the Qs came back down here into this prior pivot low, another pivot low here, which was another pivot over here. That's where we sold off. And what a recovery. Now, I'll be the first one to admit that I've usually been right on the market direction, pretty much spot on every single time, right? Like we called this decline that happened, we called this bounce that happened, right? But as I've been talking about in the previous newsletter, one thing I did not expect at all, right? Not even 1% was that I did not expect the market to come all the way back up this fast, right? Now, did I expect it to come back up? Of course, right? I did expect the market to come right back up again and make new highs, but not like this. This is very quick because I thought the whole process of the market coming back up to the all-time high would be about a 2 to 3 year process is what I was thinking, where we're going to get a recovery, which is going to be something like, this, maybe we go a little bit lower, we start consolidating, and then maybe we go back up. So it's like a 2 year process, right? But didn't happen. Not even 1 year, like 6 months in. I mean, not even 6 months actually, like 4 months in, we're recovered on the Qs all the way back up to all-time highs. All-time highs. Crazy, right? And look at the S&P 500. So S&P 500 is still lagging, the NASDAQ. Again, we got that decline where we were talking about it. We mentioned in the newsletter back in January and February that this is where we're going to decline from. We got that decline. We drew these bounce areas that this is where we can bounce from, and you can see the prior pivot lows about here and here. That's where we bounce from. But again, I did not expect it to come back up this quickly, right? So, where are we going from here? I mean, again, markets are now crazy strong. They're above all moving averages. Moving averages are now sloping up. We're above the 200 as well. So, overall, the markets do look like they are headed, higher. That being said, though, as a swing trader, I don't think it's a great environment to be overly long, right? Because yes, the markets come back up, but if you take a look at it, the market is a little bit extended, especially on the S&P. Like the Qs are fine. You look at the Qs, yeah, Qs look really strong, look like they're going to continue higher, right? But when I look at the S&P, now you see here 1, 2, 3, 4, right? 5 to 6 green up days, and on that too, on a Friday with a gap up, you got an up day. So you got like 6 green days with a gap up, and 9 EMA still hanging around here. So a pullback is definitely on the cards, right? Now it does not mean that we pull right back down. I mean, yeah, we could gap down when we couldn't go lower next week. We could open flat and then we could pull back right over here and then continue higher back up again, right? Or maybe the market's like, hey, let's just squeeze all the shorts out. Let's just gap up next week, right? Make a mega gap, and then that's where we pull back from. So that's how the pullbacks can take place. But we're definitely extended here. And the reason I mentioned that is because right now in the newsletter, we have no open trades, right? We have 0 open positions, 0 open trades. But so now it's time to look for new trades. And this weekend, I was scanning. I was like, all right, I'm going to find some good trades. And I found a lot of good looking trades. But here's the problem. All of them are in the long side, right? And now, can we do them on the long side? I mean, yes, you can, because those setups are valid. And some of them are going to be on their own page. So they don't really care about the market, So I do like a lot of them, which I'm going to give you guys as ideas. But officially, as you guys know in the newsletter, yes, I'll give you guys a lot of ideas to trade on your own and stuff like that. But the official trades, those are the only trades that I'm going to be personally taking myself as well, right? So I'm going to give you guys a lot of ideas that you guys can feel free to take on your own, and nothing wrong with those either. But the ones that I call are the ones that I'm actually going to be taking in my own account. Those are the official calls, okay? And the reason I'm not comfortable here is because, I do expect the market to pull back sometime next week. And I don't want to be in a position where I'm just in, a bunch of long trades and then have the market pull back on us, right? So I would rather be one of those circumstances where, there's a saying in trading, like, I'd rather be out of a trade wishing I was in it, right, than being in it wishing I was out. So that's the philosophy that I live by. So I'm happy to sit back, relax, and not do a whole lot, and wait for a dip in the market, and then start looking at longs. In the meantime, I'm going to find some short ideas for you, which I have found too. Okay, but before we do that, let's kind of recap some of last week's trades. So last week we had a trade on Lulu, which did not work out for us. Lululemon, we shorted it at 296. And put our stop loss at 303.10. I mean, pretty much next day this thing stopped out, so that one we lost money on. But the good news is we made 2 times that loss back on the TLT bonds, TLT, right? And it looks like a really good exit now as well, right? So TLT was another trade we took in the newsletter. This is the 20-year Treasury bonds ETF. So we were looking at it and seeing that, hey, look at how it's been nicely above all the moving averages, and then look what happened. It was above all the moving averages, but now you started to get lower highs. So you see the sellers were first over here, and now they were over here, and now they were over here. So they were constantly stepping down. The buyers were like, hey, we're going to buy it about here. So every time it come down, they bought it. Every time they come down, they bought it. Every time they come down, they kept buying it. So the buyers were hanging out about here. Sellers were keep on getting their orders lower, and sooner we got into this wedge pattern. And then right about here, when the buyers were like, hey, we're leaving, sellers took control and we shorted it, and boom, we got a beautiful drop, and we got out of it right on this day, which looked like a pretty good exit because we got out at 154.45, which at one point I was like, damn it, I think I got out early, right? But look at that. Now we look at the exit, we pretty much got it low, and now it closed at 156.11. Now, I do think the bonds eventually have room to go down to $150, but, we got 4 green days in a row with gaps. I was like, all right, I'm going to take my profit because we got 2-to-1 on TLT. So that was a really good trade for us on that. But, this kind of market, what you want to keep an eye on, guys, is your emotions, right? In this kind of environment, and this is just a different type of trading lesson I'm going to give you, is that as an investor, as a swing trader, right, you have to keep an eye on your emotions, and I'll say why. Because, these type of environments can make you chase trades or get into them late, right? Or jump into stuff that you shouldn't be in, right? So the goal is to follow your trading plan, because I have a lot of regret this cascade. Literally every single trade I've ever called in the newsletter has worked. Every single one, right? Now, doesn't necessarily mean we made money on it, right? Because sometimes they shake you out, they take you out by a little bit, and then they go higher, and that's exactly what happened. Look at every single stock we called. Remember NBL? This was a trade we were trying to trade back here. We got a failed breakout attempt, and it pulled back, so we ended up taking a small half-hour loss on it. Now it's back up again and would have been hitting our target. Remember the FNKO? Remember this one? We were trying to trade this here a bunch of times, and we made money, right? We made money the first time, we made money the second time. So we made money, but it was just a hard trading stock. But eventually, the pattern did what the pattern was supposed to do. Remember Tupperware, TUP? Look at this one. We tried trading this too, like 2 or 3 times, and yes, we made money on it, but again, not as much as we wanted to make. And now look at Tupperware doing its great old job. Remember CINF, right? CINF, look at that. Now, yes, we made money on this one. That was a great trade, but look at it now. So a lot of the things that we traded have continued to go higher. Remember GCI, that little stock? Whew, look what it did on Friday. Oh my God. And we tried trading it a bunch of times over here, but it finally went. So why am I bringing this up? I'm bringing this up so that, hey, it happens, right? That happens in trading. But what you got to do is you got to focus on the big picture, right? Because we can get caught up as traders and say, oh my God, I should have been in the GCI, I should have got back in it. Oh my God. And maybe you should have, right? Maybe you should have. But the key is that, hey, we followed our trading plan, and that's all we can do. We followed our trading plan, and yes, we could have made more money on this, but hey, we're still up like 44.5% for the year which while the market S&P is still down for the year, right? Qs are now up for the year, but they're still up, what, 1%? You know what I mean? So we're crazy ahead of the market, which is what you want to keep an eye on and focus on the big picture. But man, look at all these trades. So this goes to show that there's no right or wrong way to manage a trade, right? And this is how you want to invest. So if you want to invest in the stock market, this is how you want to invest. And talking about investing, I mean, literally, remember, go back and watch the newsletter from back in like March or April. Okay, go back. I mean, I don't know how you're gonna go back, because if you just join, you probably don't have access. But if you remember, those who've been in the newsletter for a while, newsletter back I did in March or April, I made a list of long-term stocks that I think you should be buying. And let's take a look. Let's take a look at all the long-term stocks, how they've performed. So Delta Airlines mentioned buying this around 20 bucks, right? Went to like 37 on Friday. Remember Boeing? I said, hey, buy it around $90. Look at this, went to like 220 on Friday. Remember Uber, which I still am in long term. I said, hey, buy this thing around here, about 21 bucks. It's at 38. Remember the Indian stock market, India. I said, hey, these are some of the ETFs in India you should buy around 15, 16. They're at 20. Here's another one, Indian ETF, PIN, right? INDA, right? Remember Brazil? I said, hey, Brazilian market, there's no reason for the Brazilian market to be down like 60% on the year. And it's approaching a double bottom on the monthly chart to the left. I said, hey, buy Brazil, which if you did, you could have got it around 21 bucks, went to 32. Remember airlines? I said American Airlines, right? Look at that, crazy move. United Airlines, LUV, Southwest Airlines, right? Silver. So all these long-term investments, if you did make those, I mean, they were doing a pretty damn good job. Full disclosure, I took some of them. I didn't stay in for the big moves, obviously. The only one I'm still in the Uber at 21 bucks. This is one that I'm not even going to look at for the next 10 years. I wouldn't buy this right now though. Okay, I own it at $21 average price, and this is one that I'm just gonna tuck it and not even trade. So this is not what I'm gonna get in and out of. This is one I'm gonna just buy it, forget about it, and see what happens 10 years from now. So that's the kind of trade that this one is. But again, every single trade has worked, right? How about that HTZ, guys? How about that HTZ? Remember that one? Remember the HTZ? So this was called in the newsletter as a long above $1.26, and boom, look at that, went to $3.70. Unfortunately, here's what happened. I know a lot of you guys traded this. I know a lot of you guys made money on it. I'm super happy with that. Congratulations. But I didn't make any money on it. Full disclosure. Why? Because the stop loss that I called was 79 cents, right? Was the stop loss. And if you read the newsletter rules, in the newsletter rules, it says, hey, if a trade takes out the mentioned stop loss before it actually triggers you in, it's automatically canceled. So my stop loss was 79 cents. This sucker went to 78 cents. So I ended up canceling my order, and then this thing came back up and ripped. So I know a lot of you guys got it. Congratulations. I unfortunately didn't get it. But it was a nice call, right? This is a reverse 3-bar play type of a setup that I do have a video on YouTube. I told you guys about it, and look at that, worked like a charm. So every single stuff that we've been talking or mentioning in the newsletter has worked. I mean, go back and take a look at any of those stocks that I mentioned in the past. They're all higher than where we originally traded them. But as a trader, sometimes that happens is you don't get the whole move, which is nothing wrong with that, right? Because in the end, this is what you got to look at, right? We're up, if you're risking 2% per trade, we're up 44% for the year. If you're risking 1% per trade, you're up 22%. And even if you didn't get those trades at the same price, right? Let's say you got filled 10% late, 20% late, right? Let's just subtract 20% of 22. What's that? 10%. What's 10% of 22%? Well, it's 2.2. You still made 20%, right? That's how you got to think about it. Even on this one, right? Let's say you subtract 10% for slippage, or you're getting in late. Let's subtract 4R. Guess what? You still made 40%. So that's how you got to look at these things, okay? That being said, right now we don't have any open positions in the newsletter, but I do have some ideas that I'm going to mention to you. And let me go through my list and give you some ideas that, again, ideas, meaning I'm not taking them just because, as I said, I am not comfortable going long in this market territory. But here, I like MIST. MIST, if it gets back above $4.05, looks like it could go much higher, right? Or Rite Aid, RAD. I think if this thing gets back above 15, right, this thing can also go much, much higher. Here's another one, MLND. If this thing gets back above 235, I think this one could also go higher, right? And a few more. BTU. BTU, I think if this thing gets back above 455, this thing can probably go to 9, right? Here's another one. PYX. I think if this thing gets above $4, it could probably go to $7, right? And a few more I have for you. MDLY. MDLY, I think if it gets above 67 cents, it could probably go much higher. And a few more. CNDT. CNDT, I think if it gets back above $3, could go higher. VIR, I think if it can get above 38 bucks, could go much higher. Let's see what else we got here. I have a lot of good looking longs, guys. I mean, literally good looking, meaning like if the market was looking a little better, no doubt in my mind I would be trading them. And you know what the interesting part is, that they might still work, right? This is going to be a case where I've made an executive decision to say, hey, these patterns are nice. They meet all the criteria of a trade that I want to take, but I'm making the executive decision that I don't want my portfolio to be long when the market could look like it's going to pull back. So for that reason, I'm not doing it, but there's nothing wrong with these setups. And you know, if they work, I would not be surprised at all. Here's another one, PTE. If it gets above $1.25, I think it could go much higher, right? A few more, EOLS. If this thing gets above 575, I think it could go much higher, right? Here's another one, YTRA. I think if this thing gets back above $1.55, it could go much higher. Here's another one, EYES, EYES. I think if this thing could get above $1.25, it could go much higher. Here's a few more, NVIV. Again, I know I'm going by real fast on all these trades, but the good part is that this is a video, so you can just pause it at any time. Like if you want to write these symbols down, you could just pause the video and make a list, right? Here's another one, NVIV. If this thing gets above $2.15, I think it can go much higher. Here's a few more, OMI. If this thing gets above 825, it looks like it's going to go higher. Here's another one, RRC above 680. And SWN above 345. Okay. Chesapeake Energy, CHK, above 2550. PRTK above 505. Okay. Again, I'm going by them really quick. I'm not going through why I think they're going to go higher in the setups, because that we only do on the ones that we call. But again, if you've taken PTS course, then you know what setups I'm talking about. Most of them are uppercuts, and if they're not uppercuts, they're usually a buy setup or a breakout on a higher time frame. Here's another one, CNX. CNX above 11 bucks looks pretty damn good, right? Here's another one, FTK above $1.15, right? And then we have a GLOP above 570. It looks pretty good. All right, so those are the ones that I really, really like on the long side. But as I said, because the market is up multiple days in a row, away from the moving average, I'm not really going to be looking to trade the long ones right now. Maybe if they stay here and the market pulls back, I can think about going on the long side. All right. All right. So now let's move on to the ones that we are going to do. Okay. And there's 3 I'm watching, 2 I'm going to call, and 1 I might call later. Okay. One of them is, BDX. Okay, Becton Dixon. So this stock kind of like on the short side because, the market's been making new high. This one's not really participating. This one's actually weaker than the market. So I like how it's making, lower highs over here. And to me, it looks like if it can take out these areas right over here, then we might get a sell setup, right, and continue lower. So lower high, lower low. We get, the downtrend to continue. So that's what I'm looking for on this BDX. So this one is going to be called short under 239.60 with a stop loss above 245. I'm going to look to see if it can get a move down lower on BDX. Okay. What I also like about it is, notice the higher time frames, like the monthly time frame, they look really extended. They look like a pullback is on the cards on BDX. So that's what I'm looking at. Another one I'm going to call on the short side is FGen, FGEN. Okay, so this one, same thing, right? Market's making highs, all-time highs, and this one's continuously just downtrending, right? Lower high, lower high, lower high. So now it looks like it might want to continue lower, right? Like that. So sort of like a sell setup. Now, we are a little bit late on it. The good entry would have been to short it under 35, right? Under when it made this little, support zone, that would have been the best entry to short it. But I think this one's still good. So I'm going to look to short it basically under Friday's low, right? Stop loss will be above over here. And we're going to look to see if it can continue down lower, okay? Just keep this in mind that this is possible that it maybe opens lower than that on Friday. Or maybe, what happens is that it could gap down under our entry on Monday, right? So what we want to do in that case is you want to use a limit order, right? Do not jump into this trade. Let's say we open on Monday and we're gapping down here, okay? Do not short it, okay? We're only going to short it using a limit order, okay? So if it gaps up, then yeah, we use a stop limit order. If it's gapping down, just use a limit order, okay? So we don't want to get filled late on it. So that's the FGen that I'm going to look for. Again, you look at the weekly chart, you get a weekly sell setup happening here as well. So that's what I am liking about it. So those are the two that I'm going to call. And again, all the long ones, I really like them. I'm going to keep a close eye on them. And if they set up, if the market looks a little bit better, then yes, we will call them, right? But not calling him right now because I just don't like the market where it's at. The next one I like on the short side, but this is not an official call, is IMMU. I think this was sent to me by one of the members through email, and I do like it, right? Strong stock, little rounding type top, and finally breaking all the moving averages, breaking support. So this one does look like it wants to go down maybe to $25. So it does have room to go lower, and I do like it, but I think it's also late to short it right now because the entry should have really been under the support, right? Under the support should have been the entry, stop loss over here, and then the target down over here. Shorting it now is a little bit late unless, let's say, next few days it does this. It continues to go sideways like that, then I'll be like, okay, let's short it here, stop loss there, and take it down, right? So that's going to be the plan, a watch list item on IMMU, okay? So that's the official trades at the moment. Let's just end with some overview of the market. Let's take a look at the US dollar. So there you go. We were looking at the US dollar in the last few editions of the newsletter. And, we saw over here, we got this sideways trading range. And I said, hey, if the dollar breaks down, be careful and look at commodities. So dollar broke down to the downside and went lower, which usually means the commodities should go higher. And you can see that, right? Look at oil. As the dollar broke lower, oil started to grind higher, right? Look at silver. As the dollar broke lower, silver started to go higher. Look at gold, GLD. This is actually very interesting. Usually gold would go higher too as the dollar comes lower, but instead gold chose to pull back into support, which is very, very interesting. But again, gold hasn't broken down yet because we're still in that sideways range on GLD. So keep those things in mind. Okay, I'm keeping an eye on them, but I'm not a huge fan of trading commodities because, the patterns are not clean. They trade 24 hours. You wake up with gaps against you. Not a huge fan of commodities in general. Let's take a look at the market internals and see where we're stacked up on the market here. So we're going to take a look at the S&P 500 using our McKellen oscillator. So now look at this. I noticed the McKellen oscillator, all right? And the McKellen oscillator is right now hanging around at the overbought territory, right? It's not extreme overbought. Extreme overbought would mean it could test the prior high, which is a little bit more upside, which tells me that there is a chance that the market might want to go up a little bit more before it actually pulls back. But here's the thing. It is into overbought territory, right? Which means that's why I'm being cautious to go long, because what if it pull back, right? And then that would be a pullback on the market, and I don't want to get stuck with a long portfolio. All right, so that's that. And you can see here McKellen Oscillator has been a pretty good judge of the markets overall. You can see here on this decline where we got that decline, and that was the low. McKellen Oscillator was oversold. You look at this one over here, right? McKellen Oscillator was overbought, right? And look at that, we got a crash from there. Then we got a McKellen Oscillator oversold. The market was over here. We bounced up, right? And then, you can see multiple times over here. Same thing with this decline here. It was at an oversold territory, and we bounced right back up. But now we're approaching that overbought territory. So, again, we could go higher. That doesn't mean that oscillators will do, doesn't mean that indicators what we should listen to. But, considering we can already see it's multiple days in a row, we can see that it's in overbought territory. It's just a good idea to be like, you know what? I'm going to stay out of the market a little bit. Or, again, or you could do these longs, but maybe hedge your portfolio a little bit, right? Maybe take a bunch of longs, but then short the market, That's another thing you could do, and that's one thing I was considering. Is like, hey, let's call all these long trades, let's do them, and then let's also short the market as a hedge. But I was like, you know what? Let's just wait. I think being patient is a good idea here, especially because we're killing the market returns. We're already doing really, really well, and we still got half the year to go. So I personally think the returns that we have in the newsletter, we could double it by the end of the year. That's my goal, right? So if I could double it, then that'd be freaking awesome. So that's where we stand here, guys. So again, have an awesome one, everybody. Stay safe. Stay out of trouble, right? Stay safe, stay out of trouble, and I will see you guys in the next edition of the newsletter. Throughout the week, I will keep you posted on the updates as it relates to these trades or maybe new ones I want to call. And that's that. So take care, everybody. See you guys in the next edition. Take care.